Third question on your final will be a bank reconciliation and recording adjustments. You're gonna get given an old bank reconciliation. It's important that you know how to use it because we're still waiting on a deposit and 2 outstanding checks. That's the whole purpose of getting the last bank reconciliation. The bonus is that you actually get to look at what a bank reconciliation looks like in case you forget, right? So that's kind of good news. A little harder, but a little easier. You're gonna have your cash account in the general ledger here, and you're gonna have a bank statement that kind of probably looks like this. So prepare a bank reconciliation on October 31st. Which is no problem. So the company's name is Chapman Incorporated, so we'll go Chapman Incorporated. This is a bank reconciliation. On September 30th, 2000 and nothing. September 30th. No dates on this. Okay. No year. So we're going to start with our bank statement balance. It's very important to know this is our general ledger, right? That's our book. Our bank, which unfortunately for this example is on the other page, side of the page. Here, bank statement, and we have a balance of 19,332.43. Now what we're looking for is anything that is in our books that is not in our bank statement. So it's more about comparing the two. So the first thing we want to do when we check our bank statement here, so we just want to check the last deposit that we're waiting on. 17,351. 17,351. We're then looking at our deposits from October here, and sorry, this isn't the September, this is the October. My mistake. And then we're looking for our deposit, so we know that the last September 30th did come through on October 1st. And how about the 3193 deposit? Looking at our bank statement, it is there. We have our 1139, it is there. And then we have no more deposits on our bank statement, but we do have a deposit in our ledger. So that's what the point of this side of the bank statement is. We need to write in anything that's in our book, but is not in our, anything that is in our book, but is not in our bank. So we're going to add deposit in transit. We only have the one, so we can just send it right over to the total line here. And it's for 1264.08. And 51, 6, 9, 5, 20. Giving us a balance of 25,596.51. That's a zero, sorry, that's an ugly zero. 25,996.51. And we are now going to do our deductions. And I'm looking for checks. So, starting, or outstanding checks, I should say, outstanding checks. Now we're going to start again with the last bank statement. We were waiting on check 551. That was in the October. Did check 551 clear? It did. So we can mark it off. We can mark it off here. How about check 558? It did not. So we need to bring check 558 It is there? Oh yeah, it is too, okay. Sorry guys. I missed that. Check 558, 551. Alright, so now we're going into our ledger. Check 565. It is there. Check 566. It is not there. 566. So 5, 6, 6. That is for the amount of $850.07. And once we mark it down, we can mark it down. Check 567 on our bank statement. It is not there. 567, that's for $1354.71. Check 568, it is there. Check 569 for $12.53, it is there. Check 570, it's not there. Check 570 is for $810.37. Check 571. It is here, yep. $572. It's there, yep. $573. No, it's not there. So we're gonna add it in. 573. 1,014 and 34. And once we add it in, we can check it off. 574, yes, it is there. No action. 575, it is there. And 576, it is not there. For $925.60. And now, what we're looking for, and we did add this deposit, we're looking for anything that is in either the last bank reconciliation or our ledger, our book, that's not on the bank statement. And we've marked them all down, so we are pretty comfortable moving ahead. So we can add these up. I'll just quickly add them up. And we get $4,955.09. And we get our adjusted bank balance. Okay, now we've done what is in our book that's not represented in our bank. Now we do what's in our bank that's not represented in our book. So we start with our book balance. And we can go over to our general ledger and find our last balance of cash here, 21,926.25. Yes. So we added our deposit. We subtotaled 20,596. We deducted these. So this is the subtotal of these. So this less that equals that. Yeah. Or you could just go this plus this less that less that less that less that less that gets that. So now, again, we're looking for things that are on our bank that are not in our book. So let's have a look at our bank statement. Now, we've been crossing stuff off as we've seen it. Is there anything that's in our bank, in our credits or deposits, that is not in our book? Is there anything on this deposit side that we haven't crossed off or accounted for? So we'll have no additions on this one, right? So our bank balance won't be going up. We're just jumping right to our deductions. And let's start with the first one we find here. So we go down, we've accounted for all of these. Until we get to this, on October 21st, there's an NSF check for Jessica Pearson, 1284.83. So we're gonna write deduction, we're gonna write NSF check of 1284.83. And once we do that, we can just cross it off. We're then looking along our charges here for one, and oh, we got principal. So principal would be for like a bank loan that we're paying. So we would have our principal, or you can write bank loan or whatever, and that was for 4,500. We then have we can mark that down. We then have an interest charge for 40. We can cross that off now that we marked it, and we have a service charge of $60. We add that, when we add these up, we get 505,000, 6,284.83. We put these in brackets because these are deductions, right? And so this amount, that's this amount. I'll still do the math just to be certain, but adjusted book balance. $21,926.25 minus 6,284.83. It is the same. So that's how we know we've reconciled. Now, this side is things that are on our book that are not yet recognized in our bank statement. This side are things that are in our bank statement that are not recognized in our book. Meaning, we need to do journal entries because these four things affect our balance, right? So we're going to journalize the right side. Now, again, a tip I told you 2 weeks ago, any additions, what are you always gonna debit? Any additions? Cash. Any deductions, you always credit cash. So you can go through if you want. These are all October 31st, all four of these deductions. And so October 31st, October 31st. Obviously do them one at a time. I'm just trying to show you something. We know there's 4 deductions. We know that we're gonna credit cash on all of them because these are in your bank statement. Your bank statement is your cash account, right? There's no, even if you just get this far, you'd get some marks, some. There's no, oh, that's a mistake. Just trying to prove a point that I haven't even looked at what they are. I'm just putting cash in because I know they're always going to be cash entries. Deductions are always credit. We have no additions, but if we did, they'd be debit to cash. Because this is what's going to make, these credits to cash is what's going to make this book balance become this book balance, right? That's the whole point. So now we can go and look at, okay, what are each one for? Well, the NSF check, it says it was for Jessica Pearson, a customer account. So she wrote us a check. It bounced to pay her bill. Does she now still owe us the bill? Right, so when we received the check, we would have debited cash and credited her accounts receivable. Well, now we're just going to reverse it. So we're going to go accounts receivable, Jessica Pearson, for $12.84.83 to reinstate customer account. Now, we have principal. It's a bank loan. What account can we use when we pay down our bank loans? Bank loan's a liability account, so debiting would bring the balance down. That makes sense, right? Because we're paying it back. I'm okay if you want to use bank loan payable or notes payable. If you see this, right? To make payment on loan. Now you paid, the next one was an interest charge on your bank loan, $440. So what is the interest? So yeah, it's just interest expense. So there's no chart of accounts. You're going to have to put these together, okay? Interest on bank loan. And finally, a service charge. That's just banks being banks. We can just put bank fees expense, service charge expense. All those are fine. There's no monthly bank fee or service charge. And now, that book balance is not going to be adjusted. That just will be the new book balance. If you were to redo a reconciliation, that would just be the balance on the top right.